Now on to non-current assets. Non-current assets refer to long-term assets which are owned by the firm for a maturity of more than a year. Non-current assets can be divided into two categories: tangible assets, which are physical assets, and non-tangible assets, which are not physical. Examples of tangible assets include things such as land, buildings, machines, vehicles, furniture, and computers. For ease of use, we can call tangible assets fixed assets, which is the British terminology. Fixed assets can also be called property, plant, and equipment, or PPE, which is the American terminology. The examples of intangible assets are patents, which are essentially a right to sell or manufacture the use of a particular product or process for an exclusive period of time. An example of that is a patent on a type of medicine. A second type of intangible asset includes copyright, which is the right to reproduce or sell an artistic or published work, such as a book, songs, or movies. You've probably heard this a lot just through online media. A third example of intangible assets include trademarks, which is the right to use an exclusive name, symbol, or phrase to identify a company, such as the big M on the McDonald's symbol. A fourth example includes a franchise, and a franchise is essentially granting your franchisee the license and right to use your trademark. To understand what this means, imagine you would like to open McDonald's at your university. The first step you need to take is to purchase the license to use the name, the logo, and the business system of McDonald's. So essentially, a franchise is when you purchase a business system. A last example of an intangible asset includes software, and this is as simple as computer software, such as Microsoft operating system. Tangible assets have a certain economic lifetime, meaning we cannot use them forever. Therefore, the value of tangible assets decrease every year by a certain amount, and this process is called depreciation. Note, there is one exception to depreciation, however, and that is to land, as it is assumed that land has an unlimited useful lifetime. The same applies for intangible assets in terms of depreciation. The value of intangible assets decreases every year by a certain amount, which is called amortization. Please note that depreciation and amortization have the same definition, but we use the word depreciation for tangible assets and amortization for intangible assets.